stacking surfer. I think I'm your best friend. Balances in your bank and stack. Andy, thank you for coming out. I'm glad to have you here again. It's been a little bit since we've talked, and I'm excited to have you back. And anyway, I'm excited. We've had some great conversations around banking, around BRICS. We talked a little bit about gold versus Bitcoin and how people can utilize both of those assets. But what I'd love to do is get an update from you on where things have changed over the last couple months. And do you still see an issue with BRICS? Is that something we should be still concerned about?
I think it'll become. First of all, it's good to be back. Happy New Year to you. I appreciate the invite.
Thank you. Happy New Year.
Thank you. Yeah, I think. Look, by every single measure, population, land mass, energy output, GDP, food output, nuclear weapons, global population, all of the world's resources, BRICS are a substantial and credible concern, one that I don't think will go away. I think it will only become more and more and more of an issue, and will become more and more and more visible to people. We had the 5 countries join the BRICS formally January 1. 6 originally were welcomed in, 5 accepted. Argentina has declined due to their new president, who decided to go a different direction. But the 5 that have joined, you have Saudi Arabia, the United Arab Emirates, Egypt, Iran, and Ethiopia. Ethiopia is the fastest growing economy in Africa and massively resource rich in rare earth minerals like lithium and cobalt, precious metals, etc. With Iran and with United Arab Emirates, you have a huge production of oil. We're going to get back to the United Arab Emirates in a moment. And when you talk Egypt as well, you have a kind of the choke point of Straits of Hormuz and the Red Sea. And you have all of these strategic shipping lanes and countries that are massively resource rich being invited. And that's the same thing will be said about the 30 countries that have formally applied subsequently. And every single one of them, if you go through the list, every single one of them is either strategically located for shipping or transport, or would be incredibly resource rich, including, for example, like Venezuela, who in and of themselves wouldn't frighten the West. They do possess the largest known oil reserves in the world. You just keep chipping away little by little by little by little. I call it logarithmic decay. Little by little by little, we are chipping away at the dollar hegemony. And these countries are finding safety in numbers. They are joining together. They are finding a situation that is wholly cooperative. There are no mandates by any of these countries. They are doing it all of their own volition. And the cooperation that is being found is giving, I think, this system real credibility. And it's not going to stop. By next year, we could very easily see as many as 50 countries formally introduced into the BRICS. So we have 10 right now, and 30 have formally applied. Another 10 to 20 have informally applied. And when you put this stuff together, you're dealing with the majority of, again, human population, the majority of the energy output in the world, the majority of all the rare earth metals found in the Eurasian continent, like Indonesia and China. And these are the things needed to make batteries. Haven't thought that one out real well, considering we signed an executive order to go green and told OPEC, the linchpin of the dollar hegemony, yeah, we're going green. And by 2030, we plan on being 50% green. And by 2050, 80% green. That's part of the reason you're seeing OPEC and Saudi Arabia move away, which leads me to really probably the biggest event in my mind since the BRICS, or regarding the BRICS since we last talked. And that was what came out of the United Arab Emirates. And it's really hard to find this article. It was picked up by MSN, but very few news agencies have run with it. And it's strange, but I think it's very telling if true. And that is that, I've talked a lot about it at length about the impact of Saudi Arabia and OPEC finally saying to the West, listen, you guys are going green. We respect it. You signed an executive order. Thank you for everything that you've done. We appreciate it. But we're moving a different direction, and we're going to take other currencies for oil. And bang, in that moment, that's that all at once moment. The little by little by little by little by little is what we've been seeing up to now and up to that moment, whenever that moment is. But I've talked about how Saudi Arabia joining BRICS was a huge deal, how all of the OPEC countries on the Belt Road Initiative is a huge deal. That's 75% of human population right now. That's a 50+% of global GDP right now. And it's a big deal. I talked about how, and again, every OPEC country on the Belt Road. I talked about how Saudi Arabia joining the Shanghai Cooperation Organization is a massive deal. The largest regional, financial, and military organization on the planet. Okay. So in essence, you got Saudi Arabia and those in BRICS being backed by two of the three largest nuclear arsenals on the planet. I talked about how joining the BRICS New Development Bank was a big deal. It is. It's kind of the World Bank for the BRICS. I talked about how making the statement at the World Bank meeting last year by the Saudis that, hey, we will be open to listening to other countries who want to pay in other currencies is a huge deal, because it's been more or less since 1974 when we struck the deal with the Saudi kingdom for protection. We protect you, and you value oil globally in dollars and then recycle the surplus in treasuries. It's been 100%, nearly 90+% of all the oil sold globally in the last 50 years has been in dollars. Well, this little by little by little by little is taking effect, so much so that it is estimated that over almost 25% of all the oil sold globally in 2023 was not in dollars, and we will continue to see this happen. But what was very provocative is what happened just a few weeks ago. Let's talk about it. So the United Arab Emirates had a meeting in Dubai on behalf of the United Nations, where over 200 countries were invited into the United Nations, or into the United Arab Emirates, rather, on behalf of the United Nations for a summit on climate change, global climate change. And ironically enough, this climate change meeting was presided over by the chairman of the state-owned United Arab Emirates Oil Company, where at one point he told the former president of Ireland, with all due respect, if we go this way, if we go green, we will send civilization back to the caves, just saying. Well, what was really provocative was that 2 days before you had 200 delegates from around the world coming to the UAE for this meeting, United Arab Emirates told the world that they, going forward, do not want to take dollars for oil anymore, period. That they want to trade in local currencies with their new BRICS brethren and those on the Belt Road, that they are more inclined to break free from the Western hegemony by not accepting dollars for oil. Now, this is the 7th largest producer of oil in the world. They are an OPEC country. They were just admitted into BRICS alongside of Saudi Arabia. What becomes even more interesting is we remember what happened to Gaddafi and to Hussein when they made similar announcements. When to take oil in euro or in gold, their regimes were toppled, they were killed, etc. Well, Putin, who hasn't left Russia but twice really in the past couple of years because of the Western bounty on his head, made an impromptu trip the day after everyone left to the United Arab Emirates, flanked by 4 Russian MiG fighter jets. What was said, don't know. It was probably something along the lines of, don't worry, we've got your back. You're not going to suffer the similar fate that Gaddafi and Hussein did. I would venture to say something along those lines. And then he went from UAE directly to Saudi Arabia, where the day after, OPEC then increases from 1 million to 2 million barrels per day decrease in oil production. So they upped their decrease. And right after Putin went to Saudi Arabia. So there are, I believe, no coincidences at that level. And I think it says a lot. And I think it's a major shot across the bow of the West, little by little by little by little. And, you know, a lot of people were very disappointed that we didn't see the common currency that Jim Rickards talked about issued at the last meeting in August in Johannesburg, but all dealing with the BRICS. But the one in October, the big one, they're all supposed to come back and come back with their findings and what they believe will be the pathway to issuing a common settlement currency. Now, I believe there's a difference between settlement and reserve.
And Andy, I think this is key for people really understanding the difference between these two.
And it is because the difference between a settlement currency and a reserve currency is, you know, if we look at the petrodollar, the deal was you'll settle all energy in dollars, and then the excess you will put into our bond market, i.e. reserve. And you will take that excess currency, and in order to remove any volatility, if you will, and decrease liquidity, you put it into the U.S. Treasury market, which forever has been, you know, the most stable liquid market on the planet. But from a historical context, I think it's fair to note that, you know, government debt has a very small history in a larger context as being considered wealth. And, you know, last year marked the first year in 45 years where gold had less volatility than the 10-year Treasury. And what that is to me is these countries like China, like Russia, like Saudi Arabia, realizing that they can find perhaps greater stability ultimately in gold rather than in U.S. Treasuries without funding the beast, so to speak. So we see selling of treasuries and moving to gold. So the bottom line is simply this. I think what you will see at first is a settlement currency. What we are seeing right now are all of these countries trading in each other's local currencies, trading with one another using their currencies. But there is no doubt in my mind that we will see a settlement currency backed by gold, or some form of commodity-backed settlement currency, as the Russian finance minister has been saying for a very long time. And if you look at gold being the only other tier one asset and the central banks buying more over the last 2 years than at any time in central bank history, certainly makes sense. But what do you do with the reserves? What do you do with the excess, rather? The excess, right? So I think it will be moved into things like tangibles, like gold, like copper, like silver, like rare earth metals, like any commodities, any tangibles. Zoltan Pozsar, who used to work at the New York Fed, understands the plumbing of the whole financial system better than anyone, calls this Bretton Woods 3. Bretton Woods 1 was at the end of World War II when we took over for the pound sterling, backed the currency by gold. Bretton Woods 2 is when we cut the gold standard in 71, delinking the dollar, and then the informal pegging it to oil, the petrodollar. That's Bretton Woods 2, and he calls us Bretton Woods 3, a system that will be predicated on commodities and transparency. This is the marriage between blockchain and gold.
Yep.
This is how you gain instant credibility amongst a union of countries that the West may not, or even their own allies, their own members of their own group don't fully trust yet. But I do think that that's where gold and blockchain come into play. And if I had to guess, when the music stops, when this new system is brought forth, after it has sufficient mass adoption, critical mass, if you will, that there will be a commoditized crypto or blockchain-based currency to settle in. Ultimately, will they issue a bond market? Sure. You know, how did our bond market come to be? Go back to World War II. We needed to help fund the war. And so the war effort, you look at the patriotism that was involved in buying bonds, buy war bonds, help the troops, blah, blah, blah. Well, there's a lot of patriotism, so to speak. I don't know if that's what you would call it, but let's call it common interest involved in these countries, where maybe that is on the docket. But I think first they issue a settlement currency. They'll use gold as their de facto form of savings or commodities instead of the bond market. And then phase two would be to issue a bond market that, based on the BRICS currencies. But you do not need to have a reserve currency. If you take away all of the settlements or lots of the settlements of the US dollar, you start to vastly affect its reserve status. So, you don't have to have a reserve currency right away to greatly disrupt the dollar hegemony. And I think that's where we are right now.
Yeah, I think that's a big deal. I think that's something that a lot of people are looking at. They thought it maybe was going to happen last year. And if it happens this year, maybe it's not quite as strong. I think a lot of people were looking at it as a new reserve and expecting that. And when you start talking about settlement,
well, and that's why they've moved past it, and they looked at it as enough, and it's a big mistake. It's a very big mistake, and that just goes to show, I think, a lack of understanding in the bigger picture. Look, the way that these guys are doing things, they're doing it methodically. They're not shotgunning. We have this problem in this country of instant gratification not being fast enough. That's not the case with. They got one shot. And if you're going to do it the right way, you need to have mass adoption. You need to have a large enough swath. Well, 5 BRICS went to 10, 30 now have applied. That would be 40 if all accepted. Another up to 20 have informally applied. That's 60 countries. I mean, you're gaining, like I said, already, even before the new 5, the BRICS 5, Brazil, Russia, India, China, South Africa, had accounted for a slightly greater percentage of global GDP than the G7 did. And they already have a larger swath of population and equal military might or greater, you could argue, to the 3 largest nuclear arsenals. This is not something to take lightly. And the problem is that, you can sound the alarm for a long time before it happens. And that's why I keep talking about this one simple phrase. Logarithmic decay explains a lot. Little by little, by little, by little, by little, by little, by little, by little. I mean, how many by littles? It's the game of Jenga. That's what Jenga is. Jenga could be called logarithmic decay. You are pulling out one piece at a time, decaying the greater whole. And at some point, the whole thing topples over. What is it that makes it happen? Don't know. But I mean, when you look around and see all of the things that are going on in this country, let alone the mismanagement of the dollar, right? It's bad enough that the dollar is being weaponized and we're telling the world we're going green. The deteriorating U.S. government finances someday is going to have consequences, as is the deteriorating reputation on the world stage. And I think the people running our government at this point exhibit such arrogance and incompetence. And they have us all believing that equity is more important than ability and quality and character. And I don't think this is lost on the world, man. I don't. And even more remarkable is why people are still lending money to the U.S. government when we are, 34 trillion in debt plus 130 trillion in unfunded liabilities. And it's accelerating. The U.S. debt reached a new high milestone of 34 trillion the last day of 2023. But on January 1st, 2023, a year earlier, it was 31.4 trillion. So in the course of 1 year, they added $2.6 trillion. A trillion seconds ago was 31,688 years ago. And that's why 2023 saw $900 billion just in interest payments. The Congressional Budget Office just came out and said by 2031, 100% of all 100% of all tax receipts will go to pay just the interest on the debt and mandatory entitlement payments like Social Security, which is 70 trillion underfunded. So that means, ask yourself this question when we talk about the BRICS in a greater context in the timeline. How is it that the U.S. can maintain its financial and military dominance, that within 7 short years, according to the Congressional Budget Office, that every penny of discretionary spending, including defense, would need to be borrowed? And that doesn't take into account the 10 million people that entered this country illegally and the cost of housing and of medical and of all of the entitlements. And schooling, and where does this money come from? Even the states that have to this falls upon are cash strapped, and where does it end? And I think that, but the 2031 is probably a lot more pie in the sky. I mean, you could see this happening in just a few short years. So, look, I think the BRICS are something that people need to keep a very close eye on and watch how fast it accelerates. The problem is that the U.S. media does such a horrible job of explaining what's going on outside the world, outside the U.S., that the majority of the people in this country will not be able to get out of the way of what they've never seen coming at them. And, guys like you and me and others out here who are researching and studying and trying to provide an alternate source of information backed by fact are, speaking really to the very vast minority of people in this country, unfortunately.
And that's why I like talking to you, Andy. You've got some great insights around what's happening, especially around the BRICS. But there's other insights that you have too. Another thing I wanted to ask you about too is: do you see banks stabilizing? Do you see that there's still issues with the U.S. banks out there? Because that's another big risk that I personally see going into 2024.
Yeah, I mean, I think huge. I mean, first of all, if we realize that the governments are now running $2 trillion per year, roughly, the U.S. government is running about $2 trillion per year. It has trillions more that needs to be refinanced. We have 10 trillion in bonds coming due this year alone. And the large institutional bond buyers are going to demand higher interest rates to protect from things like default and inflation, or simply higher rates themselves. And so what I'm getting at is that I don't see rates going down. I don't care what the Fed says about pivoting. Ultimately, they go higher. And let's talk about what's going on with the banks. I mean, this year alone, there is $117 billion in commercial real estate loans that need to be repaid or refinanced, according to the Mortgage Bankers Association. And, how much of that is at risk of defaulting? A lot. And I think that, this commercial real estate is owned 70% of all the commercial real estate loans and leases are owned by the regional banks, the small and mid-sized regional banks. So yes, I think that we will see, there's 700 plus billion in unrealized losses right now that these banks have on their balance sheets. And, if you look at how stupid things have become, this BTFP, this bank short-term funding program, it's up to over 140 billion, maybe 150 billion. It's all due paid back in March. But this is how sick the whole system is right now. So these banks who have all sorts of toxic assets on their balance sheet, and when I say toxic, could be a U.S. Treasury with a 2% coupon on it when rates are double that or more, and so those bonds have gotten eviscerated. Well, they can give it to the Fed at par, at face value, and at a loan right now, I believe of 4.5678%, somewhere around there, 4.7, 4.8. And then they get the money for it. So they're borrowing from the Fed using the crap collateral as an asset, and they're paying a rate right now of about 4.8%. Then they take that money and they take 2 steps back, 1 step to the right, and 2 steps forward, walk right in another door at the Fed and park it there, earning 5.3%. So they're borrowing money from the Fed at 4.8 and then putting it back there and receiving 5.3% back. Does that make sense to anybody? This goes to show how sick the banking system is. But I wanted to read something, and I wrote this down specifically so people can understand how serious this really is. And if we see more bank failures, which I believe we will be, I think they're likely several will go bust this year. This is under the Dodd-Frank Act bail-ins. We talked about this before, but let me just read you a couple paragraphs here. Bail-ins. Under Dodd-Frank, as receiver, the FDIC would have 3 to 5 years to liquidate the bank. And 1, ensure that the shareholders and uninsured creditors bear the losses of the failed bank. You are an unsecured general creditor when you deposit money there, okay? That's the depositors, unsecured general creditor. Remove bank management responsible for the failure. make payouts to claimants that are at least equal to the amount that would have been received under bankruptcy, cover FDIC insurance liability to qualified depositors up to $250,000. So the bottom line is anything over $250,000 is gone. This is the Dodd-Frank Act. And I think that all it will take will be one bank to fail that is bailed in. Signature and Silicon were bailed out. We talked about that. The massive outrage of many of the House Republicans on that, and Janet Yellen saying, well, it needed to be done to save the system, but it won't be the norm. The other banks that have failed have been gobbled up by banks like JP Morgan or other large regional banks. It's not going to happen indefinitely. And I think you will see big firms and banks likely to go bust next year amid the double whammy of high borrowing costs and pressure on consumer budgets. And I think that's coming. And, the commercial real estate problem may be the fuse that lights off the Roman candle. But I think this is coming. And then when the Fed resumes supposedly its rate cutting and money printing, we'll see inflation, take off again too. And that's when the whole vicious cycle starts over again. Inflation really pumps up, and then what do? I just think that this is a situation that we are nowhere near out of the woods yet. And it's interesting because they papered things over and people just go on with their business acting like nothing ever happened. But in reality, I don't think anything's gotten better. In fact, it's probably gotten materially worse.
Well, as I shared with you before, my family, I come from a banking family. My grandfather started a bank, or I should say savings and loan. We don't have any of those anymore. They all got taken out in 2008. And there's a lot of reasons for that. And part of those have to do with not being bailed out. So if anybody thinks that they're never going to do a bail-in, I think they're up in the night. I do think there is for sure an opportunity for them to do that. And to your point, what would that do to the market? If there's one bail-in at one large regional bank, it doesn't take much for everybody to freak out and start wanting to take money out or causing runs on the other banks, which could trigger a bank holiday or something else.
Well, that's just it. It would take one, and it would trigger a rush. I think that's true, 100%. And, I have to, when we talk about another lynch point, let me ask you a question. You understand cryptocurrencies better than I do. If I said to you that 93% of the whales hold a crypto, 93% of whales hold, no, let me put it to you this way, reverse that. 93% of all the crypto is held by the top 10% of all the big crypto whales. Would you be expecting some sort of a big rug pull? 10% hold 93% of all of the crypto.
So
would you think that would create perhaps a potential for a rug pull?
It really could. So here's my take on crypto. I think it's a way to make money. I suggest to people as they start making money off crypto as it's going up, start putting some of that into gold, into some hard assets.
No, hold on. I'm not bashing crypto because
I know.
I'm okay with crypto. But I just this one question, then sure. I'll talk to you about crypto. But if I said to you, whatever the crypto is, 10% of all the people who hold it own 93% of all the crypto, that one crypto. Would you trust it?
I am mixed on that.
Would you be nervous?
I am nervous on it. I am very mixed on it because it could.
All right. So let me rephrase it this way then. 93% of all of the equities in the United States are held by the top 10% of the wealthiest Americans. So when you talk about the potential for a stock market to collapse, there you go. The people in the know, the big money, the people closest to the information hold 93% of all the stocks in this country. So when you talk about stock market, bond market, banks, real estate market, it's all ripe for it. So I know I kind of led you down that path. I'm not a crypto basher at all. I think that there's room for crypto in everyone's portfolio. And I do agree. I've always felt that it's not an either or. They don't have to be mutually exclusive. There should be allocations to both. We're all on the, it's funny. We walk in the same door. The same door is understanding of why the brain dead monetary and fiscal policy, the benefit of having something that that removes counterparty risk, holding it in your own possession, all of the things that really, I think, inspire people on many levels to walk in that door, whether it be crypto or gold. The difference is once inside the door, they go this way. The gold buyer is buying it not to make money, but because it is money. They're buying it for protection. The crypto buyer comes in the door for the same reason. They don't trust the system, but they're looking to get rich. And that's okay. I think they don't buy it. Some do, maybe for protection and safety and all that kind of stuff. But the volatility we've seen in Bitcoin that can go from 65,000 to 20,000 or whatever makes it more of a speculative asset or investment, whereas gold and silver to me are wealth. But that's how you win, is you meet in the middle room, meet in the living room, sit down on the couch and have a discussion. And that's when you make money upstairs, come downstairs and put a little bit of it in gold. Leave your initial investment there. Marry the both of them. And I think it's easy to make money. It's hard to keep it. And this is one way to do it, by realizing that this doesn't have to be an either or, but it should be a both. And one is used to make, the other is used to take it off the table. I always tell the story of, we have friends as when my three kids, my youngest is 16 now, but when they were young, we traveled with another couple. Guy was a all-American wrestler, and we used to hang out and end up at casinos when our kids would go to bed, when we'd go on family vacations. Super good guy. And every time we would play, and at the end of the night, he would have drank me under the table, and I can hardly see straight because that's what, this guy would do. And he took great joy in seeing how drunk he could get me. But at the end of the night, he would always have a pocket full of chips. And I'm like, well, I sat at the table with you. I know I'm not that drunk. Where did all the money come from? And he said, what you didn't notice is every time I won a hand, I put a $25 green chip in my pocket. And that's how you walk away from the table at the end of the night and get to the cage with a pocket full of money. And the same thing would be true here. The difference is historical context. Gold and silver have been money since the beginning of time. And the central banks, which are the most informed traders on the globe, let alone the wealthiest, they all own gold. They don't all own Bitcoin. They've been buying gold for the past 2 years at a rate that has never been equaled. So the most well-funded and well-informed traders on the planet are showing you the way they really feel about gold, using the Western suppression to achieve their goals of de-dollarization and accumulation. So, if you believe in cryptocurrencies, if you believe in Bitcoin, if you believe in these things and they actually pan out, then take some of the money off the table, put those chips in your pocket. So at the end of the night, when you go to the cage, you got something to cash out into, or you have something to cash out, period. So I think that's kind of the way I look at crypto. I get it. I don't get it because I don't understand it as much, but I get it. And that's how you win. And it doesn't have to be either or, would be my take on that.
Yeah, I agree with everything you just said. I think it doesn't have to be either or. A lot of people are one way or the other, but I think we're missing the connection. And I think there's a lot more we could come together on. And the way your analogy was great. I love that. So what I did want to do is see some of the other suggestions you might give us to get prepared, for what's potentially coming. We've talked about BRICS. We've talked about banking. The crypto idea, I think, is perfect. That's exactly how I look at it. What are some of the other things people can do to get prepared?
I think, excuse me, the most important thing you can do is try your damnedest, and it's easier said than done, to get out of debt, especially variable rate debt. Let the laws of compounding work for you instead of against you. Whether you're accumulating Bitcoin or gold or Ethereum or silver, whatever it is that you are accumulating as an asset, become habitual and regimented with it and methodical. I tell this story all the time. When I was 19 years old, starting this company, my dad said, there's only one rule or he'll fire me. And that is, I'll buy something gold or silver based every 2 weeks when I get paid. Well, that was 34 years ago. I've never missed a 2-week period. I've owned the company outright for two decades, but excuse me, become regimented and methodical. Let compounding of time and interest work for you instead of against you. Be prepared. We're a just-in-time country. Who knows what can happen next? Be prepared with, few months worth of food and water and cash. Have some small bills, fives, tens, 20s, not hundreds, 5, 10s, 20s. Have some gold and silver. I think that these are very challenging times, and as simple as it sounds, the things that I said are really very important that can easily be overlooked. But living in southern Florida, I've seen when a hurricane is coming, within 2 days, everything at the grocery stores are gone, and the plywood at Home Depot is gone, and there are lines around the gas station 2 blocks long. I mean, I never experienced that living in Minnesota my whole life. So I think being prepared and never having to use it is better than not being prepared. And even if you have to reluctantly prepare, you should. And if you stockpile food, so what? You don't eat it. It doesn't happen. You donate it to a food shelf or rotate it and eat it. You're going to need water. You should have some cash on hand. You should have some gold and silver on hand. You should have something to protect your family with. I mean, these are all the things that you hope you don't need. The people died on the Titanic because they didn't have enough life rafts, because it was a boat that could never sink. And if I would have told you on Thanksgiving Day, sitting at dinner with your whole family, that, oh, by the way, in 2 months, we're all going to be wearing masks, and there's going to be a national pandemic, and everyone's going to be locked down, and the kids aren't going to go to school, and there's going to be required vaccines, and you all would have said, get the hell out of my house. You're a freak, right? And who would have thought that could happen? I think be prepared for the unexpected. The last time the World Economic Forum had something on their website as a potential, a simulation or a potential threat, it was a pandemic. And 2 months later, lo and behold, there's a pandemic. You know what's on their website now? Cyber event. And is there any coincidence that the Obamas produced that movie on Netflix? Cyber attack. And, what if there was a cyber attack and the internet goes down and you can't access your money? Everything is digital nowadays, right? I mean, if you don't have something, how are you going to get your money? How are you going to access anything? And I know it's far-fetched, but is it any more far-fetched than what we lived through over the last couple of years in a world that is getting two things? One, way more sophisticated and digital. And if you anyone who owns a company will understand the amount of nonstop phishing emails and trying to cyber threat, right? And the amount of money you need to spend to defend against that. And it's funny, I always get these emails from these idiots. One of them says, my wife's name is Jana, and it says, hello, Andy Schectman, I need you to change my bank account information, thank you very much. And it was my wife's name, and I'm like, it's like, really? But it's nonstop. And so when you talk about a world that is very digital, that is becoming more digital, and sophisticated, so too are the people who try to pry it from you. So who's to say it couldn't happen? Be prepared. That's about the best advice I can give anyone. And yeah, gold and silver have a role in that preparation, but so do a lot of other things. And I think, if you are responsible for your family, you owe it to them and to yourself to do the best you can to do that, and hope to God you never need it. It's like buying a firearm and bullets. No one buys a gun and bullets and says, I can't wait to use it. But when your window breaks at 4 a.m, you're damn glad you have it. Well, the same thing would be true about any of the things that I just said. And you hope you don't ever need to do it. But I think the world is accelerating. And when you look at all of the things that are happening in this country and around the world that you just shake your head at, that never was: civil disobedience, the lack of respect for authority, the breakdown of the nuclear family, all of these things, the inner cities, the lawlessness, you just have to ask yourself, do you want to not be prepared, or would you rather be prepared and sleep well at night? That is the best advice I give everyone. And as it pertains to your investments, be methodical. Pay yourself first, period, or you'll never get off the rat race. Ever. Pay yourself first, always. Even if it's only $50 a month, whatever it is, pay yourself first and give yourself a chance to break free of the constant debt cycle. And that's the only only best advice I can give anyone in these great uncertain times.
Well, I love it, Andy. I want to thank you for coming on the show today. How can people get in touch with Miles Franklin that have interest in looking at some of the services you guys provide?
The best way to do it, we do have a website. It has limited purchasing capabilities. The best way to do it, we're kind of a hybrid model, would be to request our price list that is much more competitive than the prices we post online, substantially so, or any questions involved with IRAs or anything we've talked about here, geopolitical events, you name it. My brokers all have a very vast knowledge. They're not order takers. Many of them have very distinguished careers on Wall Street or accredited degrees from places like Wharton and master's degrees from Temple and all sorts of really, really impressive people. So you would send an email to info@milesfranklin, info@milesfranklin.com. Say the Stacking Surfer sent me, ask any questions, request a price list, no obligation. And you will be contacted or simply sent the price list if that's what you ask, or responded to by email with the questions that you asked. And that would be the best way to do it. You can address it to me if you have questions for me personally. And appreciate coming back on. Hope to pick up where we left off. Not too far down the road, I think 2024 is going to be incredibly interesting. And that is a Chinese curse, you know. May you live in interesting times. These are not dull and or complacent.
I agree. I think we're going to see some pretty interesting stuff this year. And I don't know if we're going to see it like it was 2019 going into 2020. I don't know if it's going to be that interesting or more interesting. But I'm definitely getting prepared, and I'm helping people get prepared. And Andy, I want to thank you for coming on, because everything you said today will definitely help a lot of the people that are watching the show and those that people like to forward this on to. So I want to thank everybody for coming out today. And until next time, peace out.